There's a company you've almost certainly never heard of that sits underneath nearly every shareholder vote in America. It doesn't advertise, it doesn't run Super Bowl ads, and in April of 2026, it quietly extended its monopoly onto the blockchain before a single rival could even show up. This is a case study in what we call the quiet monopoly. Broadridge Financial Solutions runs the proxy voting and disclosure plumbing for more than 90% of public companies and mutual funds in North America. Not most, not a majority, 90%. One company sitting underneath almost the entire system of American shareholder democracy. Here's why that number exists. When you buy a share through a broker, you don't actually hold the share. The broker holds it in what's called street name on your behalf. And SEC Rule 14b-1 forces every broker-dealer to forward proxy materials and collect your vote through a recognized intermediary. Broadridge is that intermediary. The rule didn't name them. The rule didn't have to. By the time the regulation existed, Broadridge already owned the workflow. Every year, Broadridge processes vote instructions for more than 800 million equity shareholder positions. That's not 800 million votes. That's 800 million positions, every single one wired into a broker back office that's been plugged into Broadridge's pipes for decades. And the cash flow looks exactly like you'd expect from a regulated utility. From $4.99 billion in fiscal 2021 to $6.89 billion in fiscal 2025. 5 straight years of climbing revenue. Recurring revenues alone reached $4.5 billion last year, growing 7%. And here's the quiet monopoly thesis. The best businesses aren't the loudest. They're the ones that sit underneath the system, collect a small toll on every transaction, and become so deeply embedded that ripping them out would mean rewriting the back office of every broker-dealer in the country. Broadridge isn't a tech story. It's a plumbing story. And plumbing, when it's mandatory, compounds quietly forever. But every toll booth has a vulnerability. A new road. For Broadridge, that road was tokenization. If equities migrate onto public blockchains, proxy voting could in theory happen on-chain, peer-to-peer, with no intermediary at all. The entire moat could be coded around. So the question facing management was painfully simple. Wait and defend, or move first, and re-embed the toll booth before anyone else even arrived. They had a head start most people missed. Broadridge's existing tokenization infrastructure was already processing roughly $8 trillion in tokenized assets every single month. $8 trillion. That's not a pilot project, that's plumbing. Already laid, already running, already invoicing. So on April 6, 2026, Broadridge went live with on-chain governance for tokenized equities. Proxy votes recorded on Broadridge's own Avalanche-based Layer-1 blockchain, then distributed across multiple chains. The first live infrastructure of its kind in the industry. No competitor had a working product. Broadridge skipped the demo and shipped. Then Broadridge collected the customers. In May, Galaxy Digital, the first U.S. public company to issue native tokenized equity on a major public blockchain, ran its annual shareholder meeting through Broadridge's platform. Days later, Ondo Finance, which holds roughly 70% of the tokenized stock market with over $700 million in total value locked, partnered with Broadridge to power voting for its tokenized equity holders. The new entrants weren't disrupting Broadridge, they were paying Broadridge. And the financial result of owning the rails? An adjusted operating margin of 20.5%. Adjusted earnings of $8.55 per share, up 11%. Equity positions under administration grew 18%. This is what a regulated utility looks like when it also behaves like a software company. It isn't perfectly smooth. Closed sales, the new business bookings that feed future recurring revenue, dipped from $342 million in fiscal 2024 to $288 million in fiscal 2025. Management is guiding to $290 to $330 million for fiscal 2026. The toll booth still has to win new deals, but notice what it doesn't have to do: convince anyone to leave. Here's the lesson. The deepest moats in finance aren't built on brand or balance sheet, they're built on workflow. Once your software becomes the path of least resistance for a regulated process, every new technology that touches that process has to route through you. Broadridge didn't beat the blockchain. It became the blockchain's compliance layer. If you want more breakdowns of the quiet monopolies hiding inside boring infrastructure, subscribe. We find them so you don't have to.